Welcome back to Indianomics. We've been discussing the advance estimates for the full year put out by the Central Statistical Organization, which pegs the GDP growth at 7.1 compared to 7.6, but clearly adds a proviso that it has only taken data of the first 7 months that up until October and has not got any data for November and December, which were the key demonetization impacted months. When speaking with Dr. Govinda Rao, Dr. Arvind Virmani, Sharmila Velan, and now Deepali Bhargava of Credit Suisse has also joined us. Deepali, I guess you had a good look at the press release. Even without demonetization, we are seeing a half a percentage point cut in the GDP growth. What was the number you are working with, and are you likely to revise it?
Hi, we were working with 6.9% for the full year. I mean, and the number that we have from a CSO does not factor in any impact on demonetization. So clearly there is a downside risk even to our number. And clearly coming from what we've seen from high frequency data available so far, I think what that suggests is there is a growth slowdown both in consumption and investment. But it's not an outright collapse as some of the market participants were expecting. So that's a bit of a good news. But having said that, I think a downward revision in the full year numbers just by itself could mean that, the actual numbers are much lower than what the street is expecting.
Okay. Well, we have some final consumption expenditure numbers from the CSO. The advance estimates for the government final consumption expenditure is a growth of 24%, obviously because of the 7th Pay Commission and the one rank, one pension inclusion. The gross fixed capital formation falls by 0.2%, and the private final consumption expenditure is up by 6.5%. Is this in line, or will all this get revised, Deepali?
Actually, private consumption for us is pretty much in line. Even we are working with a number of 6.5%. And primarily because I think the big correction in discretionary consumption that we were expecting is not yet getting reflected in the numbers. So, for example, if you look at the numbers for November and December, just the auto and the passenger car sales and commercial vehicle sales, I think they have been much, much better than what we were expecting on a volume term. So that surprised on the upside. Even some bit of other discretionary items like your, passenger traffic, cellular subscription, etc., they have not really collapsed. In fact, I mean, the growth has been pretty much in line with what we've seen in the previous few months. Staples is one segment where the correction has been much sharper, but I think discretionary has held up pretty much, on a stronger side. So I think consumption, we pretty much in line with what CSO is talking about.
Well, Dr. Virmani, what is your sense? We are going to see the impact of demonetization in the November, December and the subsequent months. Even without that, if the GDP number is 7.1, what is your best estimate of the full year GDP growth?
So, on the basis of data available at the beginning of last month, I had estimated a growth rate of, I had adjusted my forecast to 7.2% plus minus 0.2%, based on both whatever the impact of the cash withdrawal was and in the general acceleration in inflation and global situation, etc. Given that, I don't know if you recall, but I think I said it to you only, that the key issue is going to be remonetization in terms of the transaction demand for cash, which really cannot be replaced by checks and digital money so quickly in the period in which we are talking. And the only thing I would add to that is that I would kind of expand my range because the evidence available for the last 30 days does not indicate that enough small denomination cash has been injected so that the effects are going to continue and deepen in the third month after the denomination. So it's possible that I would have to revise my estimate by another 0.5%, but I wouldn't go below that as many of your discussants I have been watching in your earlier program indicate.
Okay.
So at most, it would be a revision downwards of about 0.5%, but I would still wait for a couple of months, couple of weeks to get a little more data on the cash.
Okay.
That's one point. The second point related to the budget is that, when you look at this GFCE, which you correctly noted is expansion because of the pay commission
yes.
recommendations being implemented. This is not played out into the demand that quickly, right? So you will pay out the money into the accounts,
yes.
Accounts of the government servants, and mostly by check.
Yeah.
So this is all going to be number one. It's not going to be number two economy.
Yes.
And this will play out over the next several months.
Yeah.
So I think your discussant who just
yes.
commented before me is quite right that I do not anticipate that strong negative effect on the private consumption as many other people who have commented on your show have said.
Fair point, sir. So next year may not look that bad. Dr. Govinda Rao, what would you go with? We will probably get a slightly exaggerated fiscal deficit number of actual fiscal expenditure both in the current year and next year because the government could be working with a higher number, you think?
As far as, fiscal 16-17 is concerned, I don't really see a great deal of a problem because to the extent that the money does not go back to, the demonetized money does not go back to the banking system, there will be some either in terms of the dividend from the Reserve Bank or in terms of the, sort of a lower interest payment because of the cancellation of government securities. There will be some adjustment, and then I don't see 16-17 as a major problem for fiscal deficit number.
Yeah.
No,
my point is that my point, sir, is that
17-18 budget numbers.
No, my point is that as it is for the current year, the government was working with 150 lakh crore. Advance estimates are saying 152 lakh crore. On this, if the government estimates a further growth, next year it might give itself a decent amount of room for fiscal spending.
No, in fact, next year what will happen is that, in the budget they will show that they are going to adhere, they will have a much larger, borrowing, they will show a larger borrowing space.
Okay.
But then there is one other unknown element still. We do not know what is going to be the NK Singh's committee recommendations.
Yes.
How exactly is he going to, fix the fiscal targets?
Yes.
Is not as yet not known. So, that's an unknown thing. So possibly we will have to wait until the report is presented.
Fair enough.
But I am not very, whatever be the case, the numbers that they are going to do based on this growth rate, that is 7% growth rate, will be an exaggerated number.
Okay. Fair point. So we cannot trust the fiscal deficit number.
It will be exaggerated for revenues, it will be exaggerated for expenditures, it will be exaggerated for the deficits as well.
Okay. Well, Dipali, what you said that you may have to revise your GDP number lower. How much lower might it be? And what are your first comments on the next year, FY18, in terms of growth?
Right. So, firstly, for FY18, we do have an acceleration because we do expect some bit of government spending pickup to happen. And monetary conditions have improved, should improve significantly with the fall in MCLR that we've already seen. So, I think both these factors should mean that GDP growth accelerates, and I think that will be the most important for next year. The number we have for next year is 7.4, which is about 50 basis acceleration. There is a downside, but I think the key would be if it accelerates or decelerates, and I think our view really is it should accelerate.
Okay.
In terms of for this year, I think we still have scope for government to spend in the last quarter, given what we have on capex till November. So for now, I think we are going to stick with our 6.9%, which is anyways lower than what the government is talking about. So pretty much comfortable on 6.9.
Okay. Well, that's positive. Well, then in that case, we will have to wrap up this special edition of Indianomics. Thank you, Dr. Virmani, Dr. Rao and Deepali. The main conclusions from our guests is that next year need not be a very bad year. Current year, the advanced estimates indicate a 7.1% growth, but the real growth number will be lower. Sharmila expects it to be 6.9, maybe with a little bit of a downward bias. That is largely because government final consumption expenditure, the big 7th pay commission expenditure, could still boost growth. And she doesn't see a terrible breakdown in consumption, neither does Dr. Virmani. However, there are a bunch of economists who believe that the actual GDP number this year could be as low as 6.5%. In fact, Pranab Sen even expected 6%. For the next year, all of them expect a little better performance than the current year. That's the most hopeful scenario. Let's wait and see how the actual numbers turn out to be. Thank you for watching this edition of Indianomics.